All right, so this will be a trade recap for Wednesday, January 14th, 2026. Let's get some charts up here. All right, so if this is your first time here, just to give you guys a heads up, 1 minute chart here, daily chart here, and typically all the levels you see here are plotted before the market opens, and then they stay that way. They'll get changed or amended once the open happens, and those are adhered to pretty religiously. And I guess a little different than some of my other recaps that I've done so far is not a whole lot of levels on here. That had to do with the fact that we gapped down overnight. So the only real technical level that we were interested in was the prior close. So with that being said, main plays were off of moving averages, not the technical levels that were plotted, but they were there just in case things kind of pushed back up. And while they did a little bit right out the gate, just really didn't come up anywhere near where that would be applicable to try and take a trade. This was all off of moving averages. So with that part out of the way, pull up some entries here. The first one was off of SPY, and this is a little messed up because obviously these moving averages, because they are short term, they move around during the open session, and because of the price action, they're not exactly where they were right at the moment of execution. So on SPY, came down into the 9, and then fairly cleanly just hit it with 1 on the approach, hit it with 1 at, and then on the first reaction paid out the first part and then the second part. Very clean in terms of the reaction. And yeah. And from there, we went on to Qs, which more or less did the same thing. The only difference with Qs, though, in terms of the price structure, it was actually below the 9, so it came up into it. So grabbed the short off of this one, and then basically just took it down after it popped into it. So very similar price structure. They were just on opposite sides of the 9 EMA on the 1 minute or on the daily, and just worked it. And then later on Qs, we had gotten some volatility, but it came and dumped into the 20 simple moving average, which is one of the stiffer moving averages, and figured that there would be at least some level of reaction there, which, as you can see, there was. Didn't want to necessarily hold on to this on the long side because it kind of had already demonstrated that, hey, this is breaking down, SPY is breaking down at the same time. If you watch both these together, they're moving in agreement. It's one of those things where it's probably not looking too good. In this circumstance for the long, popped back up into this intraday level right here. And again, there's some technical daily levels here as well, and then just continue to move lower. Again, ultimately did it reclaim some of this? Yeah. But the thing is, like, if you executed this looking for more and didn't pay yourself and it dumped out here, I mean, didn't quite hit the 50 there. So would you have had it averaged, corrected that enough to potentially get back green over here? That's hard to say, especially with Meltdown. You'd have to add pretty heavily to the point where you're going to be oversized. So it's not worth the risk. So keeping it simple, incremental trades off of moving averages, and, take what you can get. That way you're not overexposing yourself. Because the longer you're in the market or the more trades you take during a session, that's more exposure to things that may not go in your favor. And that's something that I've had to learn repeatedly ever since I really started trading, or not really started, but got more time under my belt. There was a period where it's one of those things where it was constantly, what is that next opportunity? And sometimes one of the biggest things you need to learn to do is simply be content with what you've already made on a day. And again, it doesn't have to be, home runs again, and you should never shoot for home runs. They'll happen in due time of their own course. You just happen to be in the right place at the right time. Never aim for a home run, because then you're just being greedy and the market will punish you severely for that. So, yeah, fairly clean action on the day, surprisingly. There was the chance of the Supreme Court coming out and making a ruling on Trump's tariffs today, so that was a factor as we were coming into 10 a.m. Eastern time, which is typically a time when you'll see things come out in terms of data and news and stuff like that. So it's an important time to watch or just be aware of, because sometimes the best thing you can do coming into those times is simply be flat. Like, don't be in any position whatsoever. If you're trying to make a play off of some sort of news or economic data release, I mean, that's just gambling at that point. You have no idea how the market's going to react. What could be a good thing on paper, the market interprets as negative, and vice versa. So just something to be aware of if you're newer to this. And again, maybe coming from a place that encourages those kinds of plays, typically they're not the safest. And you, again, having a pretty mixed hit rate that you can't really make any rhyme or reason of. You want a strategy and process that is very like mechanic and robotic to a point that you have the discipline to follow. And then once you kind of get into those habits, you can maybe tweak some things on the strategy to improve the hit rate on it. But that's a very delicate process. You kind of need to crawl before you walk and walk before you run, because if you're constantly just throwing things against the wall, it will never really pan out for you, because there's just not enough. It's too much noise. It's too much random. It's too much chaos. And the market can already be irrational, unpredictable, and chaotic, volatile. And sometimes it can be extremely clean. So watch out if that's kind of where you are. You're trying to figure yourself out, figure out your strategy, your approach, or whatever they call it, edge. One of the best edges I can speak to in the market is figuring out what the institutional players in the market are doing, what they're thinking, how they would play something, and kind of just riding their coattails, honestly. Because that's all more or less what we do day in and day out. Where is the money? Which side is the money, again, the institutional money, going to be moving around? What levels would they be looking at? And things like that. Because ultimately that's where the market gets its structure. It's from those bigger players, especially in that first hour or so of the market when there aren't nearly as many retail people in, because they're waiting for different things like setups and different price action structures, patterns, and breakouts and breakdowns, all the things you hear about on social media that honestly don't really work or work consistently. So with that being said, just kind of my 2 cents on some of that stuff. You can obviously disagree with me on that. But yeah, hope everyone did well today, and I will catch everyone on the next one tomorrow. And in case you're not aware, it is a long weekend, I believe, here in the US, and the stock markets will be closed on Monday. So if you happen to be swing trading or something like that, be aware of your market holidays. You got one coming up. Other than that, have a good one. Catch everyone later.